Welcome to insightfulvalue.com, where we go beyond the headlines to uncover undervalued companies before everyone starts talking about them. Today we're looking at Church Dwight. Yes, the maker of Arm & Hammer, Trojan, OxiClean, and other household names. The stock has recently dipped, but is this just a pause before another run-up? This video is for informational and educational purposes only, and not financial advice. Don't forget to like this video, subscribe, and share your opinion in the comments. Church & Dwight is a US-based consumer goods company with a century-long history and one of the most stable portfolios in the market. The company owns over a dozen power brands that dominate their categories, including Arm & Hammer for baking soda and cleaning, Trojan for personal care, and OxiClean for detergents. With around 85% of its sales coming from these core brands, the company's revenue base is both diverse and resilient. In recent quarters, Church & Dwight reported steady revenue growth of about 5% year over year, reaching roughly $6.4 billion in annual sales. Gross margins improved slightly thanks to pricing adjustments and easing input costs. Operating margins are healthy at around 20%, and the company continues to generate strong free cash flow, allowing it to maintain and raise dividends. Church & Dwight has increased its dividend for more than 25 consecutive years, currently yielding about 1.2%. Not huge, but extremely reliable. So why is the stock down now? Mainly due to investor rotation away from defensive consumer staples and concerns about slowing consumer demand in the U.S. market. Some investors also worry about the company's valuation after a strong run over the past few years. However, with inflation cooling and input costs declining, profit margins could improve, potentially leading to a recovery in the share price. The risk here is that sales growth could stagnate if consumers trade down to cheaper alternatives, and the strong US dollar might pressure international sales. On the other hand, Church & Dwight's consistent profitability, strong balance sheet, and proven ability to raise prices without losing customers make it a long-term defensive play. At Insightful Value, we break down companies like Church & Dwight to show how fundamentals and sentiment shape opportunities. For more insights on this and other undervalued companies, visit insightfulvalue.com. And before you go, hit that like button, subscribe, and tell us what you think about this stock in the comments.